Citigroup just projected a staggering $5 trillion market for tokenized assets by 2030. Are you prepared for the fallout that could affect millions? When Citigroup speaks, the market listens intently. Their latest report, laden with foreboding, raises alarms about the rapidly evolving future of tokenized securities. But what does this mean for the everyday investor? With forecasts pointing to explosive growth in this burgeoning market, it may be tempting to jump in headfirst. However, we must pose the critical question: is this leap into the world of tokenized assets a smart move or a reckless gamble? Here's the part nobody's talking about. As we explore the hidden risks and potential rewards, we will illuminate what investors truly need to know to navigate this complex landscape. Tokenization is a transformative process that converts physical and intangible assets into digital tokens on a blockchain platform. Citigroup believes that this revolutionary technology could reshape the very fabric of finance, suggesting that the market for tokenized securities could soar to a jaw-dropping $5 trillion by 2030. To put this into perspective, that's a monumental leap from the mere $17 billion observed today. Investors are abuzz with excitement, but this exuberance conceals deeper, pressing issues that can't be ignored. Here's the part nobody's talking about. As the technology gains traction, regulatory frameworks struggle to keep pace. The looming uncertainty surrounding how these innovations will be regulated and managed is a vital consideration that could potentially derail many investments if not addressed soon. Here's what that producer price data signals for the months ahead. But here's where the narrative grows more perilous. The frenzy surrounding tokenized securities could inflate an entirely new bubble. Investors are rushing into this trend, motivated by the prospect of quick returns on their investments. Citigroup's analysis points out a staggering possibility: if just 10% of traditional assets transition to tokenized formats, we could experience an unprecedented surge in demand that outstrips current supply. Here's the part nobody's talking about. Yet, investors must prepare for the harsh reality of market dynamics. With regulatory scrutiny intensifying globally, governments are increasingly wary of the implications of blockchain technology, fearing fraud, money laundering, and other illicit activities. This heightened vigilance could stifle innovation and spark significant market corrections. The crypto market is notorious for its volatility, and the potential for devastating losses is all too real. As investors, it's imperative to question whether you are equipped to weather the storm if the market takes a sudden downturn. So, what's the essential takeaway for your portfolio? As optimism about tokenized assets continues to grow, the risk of a significant market correction looms larger than ever. Investors could rush into tokenized securities, inadvertently inflating the market beyond sustainable levels. If the bubble bursts, it won't merely translate to a temporary loss of profits. It could lead to catastrophic financial fallout impacting millions. Historically, market corrections have resulted in losses upwards of 50% for investors caught off guard. Here's the part nobody's talking about. In this precarious environment, the stakes are high, and every investment decision must be made with caution. Smart investors are staying alert, ready to pivot as the landscape shifts. Are you among them? Looking ahead, the future of tokenization remains shrouded in uncertainty. Will it cultivate a more efficient and transparent market, or will overregulation hinder its promise? Citigroup's predictions underscore a critical juncture in the evolution of finance. Assessing and understanding these risks is essential for any potential investor. The delicate balance between opportunity and risk has never been more precarious in the financial world. Here's the part nobody's talking about. As we continue to monitor developments in this space, it's crucial to stay informed, keeping an eye on industry shifts, regulatory changes, and emerging leaders in the tokenization space. Only then can investors remain poised to adapt and seize the moment. In conclusion, the stakes are undeniably high. Citigroup's forecasts herald enormous potential for growth in the tokenized asset market, but the accompanying risks are equally significant. Investors must navigate this fragile landscape with care. This isn't just about chasing trends, it's about the preservation and protection of your hard-earned investments. So, what's the bottom line? Here's the part nobody's talking about. Approach tokenized securities with a cautious mindset. The potential for catastrophe is not just a distant possibility. It's a very real threat that could materialize at any moment. What's your take on the rise of tokenized assets? Are you ready to dive in, or do you see risks that others are overlooking? Share your thoughts in the comments below. Don't miss our next video, where we'll explore the hidden dangers of crypto exchanges and reveal crucial insights into navigating this complex landscape.
Join us on Chaos Ledger!